have a look into this question number 27. Question number 27. Question number 27 in the practice manual, a very good question. Avient Limited, registered in Noida, Uttar Pradesh, is a supplier of machinery used for making bottle caps. The supply of machinery is effected as under. The wholesale price of the machinery, excluding all taxes and other expenses at which it is supplied in ordinary course of business to various customers, is rupees 42 lakhs. So the price at which they will be usually selling will be 42 lakhs. So whenever you read the question, you try to analyze what is the impact of that in your mind. Okay. So 42 lakhs is the usual price that they will be charging. However, the actual price changes. So within the range of 10% depending upon the terms of the contract. So the actual price may be within plus or minus 10%. Okay. Then 42 lakhs should not be taken as a value. We need to see what is the price at which goods are sold. So this is their general knowledge of the business. And then apart from the price of the machinery, Avient Limited charges from the customer the following incidental expenses. The word used is incidental expenses, which means that it should definitely be included in the value. As per section 15 subsection 2 clause B, incidental expenses should be included in the value. Associated handling and loading charges, installation and commissioning charges. So 1,10,000 rupees should be taken to the value. Whatever may be the price, for that price 1,10,000 should be added. And the machinery can be dismantled and erected at another site if required. The above charges are compulsorily levied in case of every supply of machinery. So no need to say that it is incidental charges. It should be included in the value as per section 15 subsection 2 clause B, which means it is also charged to the buyer. So it should be included in the value. And not 15.2b, it is 15.2c. 15.2c. Transportation of machinery to customers' premises is arranged by Avient Limited through a third-party service provider, a goods transport agency. The customer enters into a separate service contract with GTA and pays the freight directly to it. So actually, who should pay the freight? Recipient only will pay freight. It is not the liability of the supplier. If it is liability of the supplier incurred by the recipient, then it should be coming under 15.2b. It is not the liability of the supplier. Okay. So transportation of machinery to the customer premises arranged by Avient Limited through a third-party service provider, a goods transport agency. The customer enters into separate service contract with the GTA and pay the freight directly to it. So which means customer, the recipient, has incurred the expenditure on his own account. So customer incurring the expenditure, recipient incurring the expenditure on his own account will not come into the value. So therefore you can ignore this transportation charges. A cash discount of 2% on the price of the machinery is offered at the time of supply. So generally cash discounts and all will be like given after supply. But in this case the cash discount is given before supply itself. If the customer agrees to make payment within 15 days of receipt of the machinery at his premises, in the event of failure to make the payment within 15 days, then the company recovers the discount. So generally the cash discount will be like, first they will be entering into the terms for cash discount, and thereafter if the payment is received within the time, then they will give cash discount. But here it is the case where cash discount is given before supply itself, before delivery of goods itself, and therefore as per section 15 subsection 3 it will be allowed as a reduction. And again at a later point of time, if the payment is not received, it will be recovered. So when it is recovered along with interest also it is recovered, means that will be chargeable to GST at that time when it is recovered, and for that a debit note needs to be given. Okay. So charges simple interest at the rate of 1% per month or part of the month. No separate amount of GST is recovered on the total amount due from the customer towards the machinery supplied from the date of making the supply till the date of payment. However, no interest is charged on the tax dues. Okay. So we need to compute interest on the amount due from the customer. Amount due from the customer excluding taxes. Excluding taxes. And the interest rate will be 1% per month or part thereof. And then for every machinery supplied, Avient Limited receives a price linked subsidy of 2 lakhs from its holding company Diligent Limited. So which means subsidy will be received. Subsidy from whom? Holding company. So other than CG or SG. And is it directly into the price? Of course it is directly into the price, because it is for every machinery supplied. So therefore it is directly into the price and it is to be included in the value. And so therefore whether we have the information as to whether the given price is after considering the subsidy or without considering the subsidy. Let's read that. So Avient Limited has supplied a machinery to an unrelated party, Daffodil. So far whatever information that we have is only the knowledge of their business. So from here only we have the transaction. So Avient Limited has supplied a machinery to an unrelated party, Daffodil Private Limited, on 1st August at a price of 40 lakhs excluding all taxes. Invoice was issued on 1st August by Avient Limited. The Corporate Office of Daffodil Limited, which is at New Delhi, has entered into contract with Avient Limited to supply of machinery. However, the machinery has to be installed at the Daffodils Private Limited registered manufacturing unit located in Gurugram, Haryana. So this much information they gave just to convey that we need to see whether the transaction is intrastate supply or interstate supply. So we should be having knowledge of some place of supply provisions also. So we have one section 10 subsection 1 clause E and clause D, two specific sections in that of IGST Act, section 10 subsection 1 clause D and E of IGST Act. So in the D says that whenever the goods are assembled or installed at site, we will take the location of such assembly or installation as the place of supply. So where the goods are assembled or installed, at Haryana, so that will be taken as the place of supply. So this is the first node that you need to write to determine whether it is an intrastate supply or interstate supply. So remember, when you are presenting the answer sheet, okay, so computation part is there, explanation part is there. So if at all this question is asked, this question will be asked for a 14 marks, and in the notes part you need to write as per section 10 subsection 1 clause D. Suppose you are not able to remember subsections and clause, as per section 10 of IGST Act, in case of goods assembled or installed at site, the place of supply will be location of such assembly or installation. In the present case, the goods are assembled at Haryana, therefore Haryana will be taken as the place of supply, and the location of supplier is, where is the location of supplier? Uttar Pradesh. And where the location of supplier is Uttar Pradesh and place of supply is Haryana, therefore it is an interstate supply chargeable to IGST. So like that, okay. So therefore this transaction is chargeable to IGST, that 40 lakhs, okay. And thereafter 40 lakhs will be taken as the price. So but what mistake that students will generally do is that they will take 42 lakhs as the price. Now 42 lakhs is the usual price, but what is the price at which they charge it to this customer? 40 lakhs. So that will be taken and excluding all taxes, okay. And now we need to make some adjustments to this 40 lakhs. And continue with this, Daffodil Private Limited has paid the freight directly to GTA. Definitely that will not be coming into the value, because it is not the supplier has to pay an amount which is paid by the recipient, not that one. Discount at the rate of 2% on the price of the machinery was given to Daffodil, as it agreed to make the payment within 15 days. So 2% discount is on what? 40 lakhs. 40 lakhs, price 40 lakhs. And payment within 15 days, but however Daffodil paid the consideration on 31st October. When the product is sold, the product is sold on 1st August. The product is sold on 1st August. So therefore 1st August will be taken as the time of supply, okay. So time of supply will be the due date of invoice or actual date of invoice, whichever is earlier. So here, what is the due date of invoice? At the time of removal from the factory. So at the time of removal from the factory, it is 1st August, that will be taken as the time of supply of this transaction, and we need to raise an invoice for August month. And 1st August, the payment should be made by 15th August. However, Daffodil Private Limited paid the consideration on 31st October. So there is a delay. So what is the delay? By 15 days it should be paid, but it is paid in October. So it is like August, 15 days, September, October, 2.5 months. So part thereof, for 3 months, we should take 1%. So 3% will be the interest. So 3% will be computed on the amount due from the customer, okay. And for that recovery, we will be giving a debit note. So when we will give debit note, the time of supply in case of debit note is at the time when the payment is received, that is interest is received. So remember, for debit note, it is not on accrual basis. So interest is not taxable on accrual basis. Interest is taxable on receipt basis. So as per section 12 subsection 6, as per section 12 subsection 6 and 13 subsection 6, so interest will be taxable on receipt basis. So whenever the interest is actually received, at that time only we need to pay GST, okay. So therefore, so this interest we need to give a debit note. So not interest as well as the discount recovered. So we need to give debit note not in August month. So we have to give debit note in October month. So here Daffodil paid the consideration. We take an assumption that so even interest and the discount amount is also paid on 31st October. That has to be taken, okay. Then for the month of October, we need to give a debit note for that discount which is recovered and for levying the interest. And for that interest, what rate should be taken? What is this machinery? So this is a bottle cap making machinery. For bottle cap making machinery, what is the rate of GST? 12%. Even interest is also taxable at 12%. and then service of transportation of goods and other service that is not relevant. Now what is the requirement? So far what we have read is the question. Now calculate the GST payable, that's a requirement on the machinery and support your conclusions with legal provisions in the form of explanatory notes. Make suitable assumptions wherever required. So that's given. So now first we will be starting with the answer. So in the answer what we need to do, okay, so you take your calculator, and I'll just explain, and those numbers you just take it into the calculator, okay. So first we will start with the price of the machinery. You need to prepare a table. So the first step is that computation of GST payable by Avient Limited. Okay, computation of GST payable by Avient Limited, that's a heading. Then with respect to invoice issued on 1st August 2000 or 1st August with respect to invoice, next line, and there you will prepare a table, particulars, note and amount. Okay, in that particulars first you will start with price of the bottle cap making machine. So in that there is no note, so directly you will take 40 lakhs, that is the first line. So you take 40 lakhs in your calculator, 40 lakhs. And then the second line. So what is the second line? So handling charges, associated handling charges, installation and commissioning charges. So 10,000 and 1 lakh. For these two, same note, note number 1. What is that note number 1? So that is as per section 15 subsection 2 clause C, any incidental expenses incurred by the supplier and charged to the recipient before delivery of goods should be included in the value. In the present case, the given price of 40 lakhs is the given price 40 lakhs do not include these handling charges and installation charges, hence it is to be added. So therefore that note will give the explanation for this. So 1,10,000. So add 1,10,000 in your calculator. You got 1,10,000. Okay. So then next one here. Next, so what is the next number? So GTA and all is not there. Leave it. Discount. A discount is offered 2%. So discount is before supply. So now you have to take discount, cash discount. Note number 2. In note number 2 you need to write as per section 15 subsection 3. So discount given before or at the time of supply should be excluded from the invoice value and GST not payable on the same. In the present case, as the cash discount is offered before supply, therefore it is to be excluded. And you need to take, what is that price? 40 lakhs. 40 lakhs into 2%. 40 lakhs into 2% is what? 40 lakhs into 1% is 40,000, 2% is 80,000. So minus 80,000. So take in calculator minus 80,000. So discount you have given. And next number. What is the next number? This interest etc. will not come now. What's the next number? 2 lakhs. 2 lakhs is subsidy from a holding company. So subsidy directly linked to the price. So it is to be included. And there is no information. So first you will write subsidy from a holding company. Note number 3. In note number 3 you will write subsidy from other than central government or state government directly linked to the price is to be included in the value as per section 15 subsection 2 clause E. In the present case, it is assumed that the given price is after considering the subsidy. Therefore, this subsidy of 2 lakh rupees is to be included and it is excluded in the given price. Therefore, it is to be added. So, we took the assumption. I told you. When the question is silent, what is the view that we need to take? View number 2. What is that? View number 1. What is that? View number 1. The price should be considered as after excluding. The price should be taken as after excluding the subsidy. So means the subsidy is already deducted in the given price. So therefore we need to add. So plus 2 lakhs. Plus 2 lakhs. 42,30,000 will be taken as the value as per invoice. So total 42,30,000. GST on above into 12%. So what is the invoice value? So the invoice value will be 42,30,000 and GST will be 42,30,000 into 12%, that is 5,07,600. That will be the GST that is payable. Now next line. with respect to debit note issued in the month of October, 31st October, as and when the payment is received. Okay, underline. So with respect to the debit note issued on 31st October, there first line, discount recovered. Discount recovered. What is the discount recovered? 80,000. What is the discount offered? 80,000. Discount recovered also 80,000. And what is the GST on discount recovered? Why? If the discount is not offered, they would have paid GST 12%. Na? So GST on discount recovered 12%. Exclusive or inclusive? Exclusive only, because 80,000 is exclusive. Okay. So 80,000 into, so 12%, that is 9,600. So what is the GST on discount? So now debit note to be given. This is for invoice here. And then debit note. So GST on discount recovered. So 9,600 plus interest. What is the interest? Remember carefully. While computing interest, you need to take the amount due from the customer. So what is the amount due from the customer? 42,30,000 is not amount due from the customer, because 42,30,000 is the value. Out of that, 2 lakhs is due from the holding company. That is not due from the customer. So 2 lakhs should be taken out, because 2 lakhs is not due from the customer. 2 lakhs is due from the holding company. So take 42,30,000. From 42,30,000, take out 2 lakhs. Why? Because 2 lakhs is due from the holding company. For computing interest, we need to take total amount due from the customer only. So what is the total amount due from the customer? So 42,30,000 minus 2 lakhs you should take out. So 40,30,000. Now even 80,000 rupees is also due from him. Discount offered. So while computing 42,30,000, you gave a discount na. The discount is also to be recovered from him. 80,000. So 41,10,000 is the amount due from the customer. 41,10,000 is the amount due from the customer. 41,10,000 is the amount due from the customer, excluding taxes. Okay. So now 41,10,000 into how much interest? 3% interest. Why 3% interest? August 15th you should have paid, but he paid in October. So 2.5 months. So 1% for every month or part thereof. So 3% into 3% interest, 1,23,300. So interest equals to 1,23,300. But I told you, so in the absence of information, interest should be assumed as inclusive of GST, correct? So that you need to write. Interest is assumed to be inclusive of GST, 1,23,300 into. What is the rate applicable to that interest? Interest is not a separate supply. We need to take the rate applicable to the original supply. What is the rate applicable to the original supply? 12%. So into 12 divided by 112, that is 13,210.7. So 13,211 should be taken. So 9,600 plus 13,211 will be taken as the GST payable. So therefore the total GST payable as per debit note will be 9,600 plus 13,211, that is 22,811 will be taken. Okay. So you understood now how we got 1,23,300 into what is the rate of GST? 12%. So into 12 divided by 112. That's how we got 13,211. Okay. Plus 9,600 is related to GST on discount recovered. So 22,811. So this is the answer for this question. Now, so whatever queries you have, you can ask related to this question here. So if at all this question is asked, easily for 14 marks they can ask. It's one RTP question, a very good question. Any doubt in this? Hello? Any doubt here?
Sir?
Yes.
Sir, can you please explain the last one, which is the interest part?
Yes, I'll explain here. So first we need to see, one second. So interest should be computed on 1,23,200. Okay. Interest should be computed on 1,23,200. So see this. This is the answer. First we took 40 lakhs. And then handling charges 10,000 and 1 lakh. Transportation cost will not be there. price directly linked to the subsidy, so 2 lakh, so 43 lakh 10,000, discount we gave for 42 lakh 30,000 will be taken as the value. And what is the tax liability? Tax liability is 42 lakh 30,000 into 12%, so 5 lakh 7,600 over. Now interest, so interest will be 41 lakh 10,000. How 41 lakh 10,000? First 42 lakhs, interest should not be calculated on tax component, that's what they says. So this interest is collected by supplier, so take 42 lakh 30,000. So 42 lakh 30,000, 42 lakh 30,000 minus 2 lakhs is not receivable from the customer, 2 lakhs is receivable from the holding company. So take out the 2 lakhs, that part you understood, 2 lakhs should not be taken. And even so this discount whatever we have offered already we deducted 80,000, but that 80,000 is also recoverable from him, so plus 80,000, that is 41 lakh 10,000, 41 lakh 10,000 will be taken as the amount due from the customer into 3%, so 1,23,300. Okay, and sir, what they did is that they computed even on 80,000 recovery and this 1,23,300 on both, the GST is computed on an inclusive basis. Sir, can I take on discount exclusive and on interest inclusive? Yes, you can do that. You can do that, but in this RTP what they did is that they have taken everything on inclusive basis, that is both this 1,23,300 plus 80,000 both is considered on inclusive basis into 12 divided by 112, that is, one second, so 1,23,300 plus 80,000 into 12 divided by 112, so 21,782 that is taken. But what we did is that we took it separately, so we took 80,000 rupees exclusive and 1,23,300 inclusive. Can that also be done? Yes, that is also correct, as well as this is also correct. Anyway you can do, because that's the reason why you are writing the assumption there. Then question number 24. Question number 24 is a very good question. So it is related to post supply discount. Kaya Trade Links Private Limited, a registered manufacturer of premium ceiling fans. It sells its fans exclusively through distributors appointed across the country. The maximum retail price printed on the package of the fan is 10,000 rupees. So MRP of the fan is 10,000. The company sells the ceiling fans to distributors at rupees 7,000 per fan, exclusive of applicable taxes. So they are selling it to their agent at the rate of 7,000 rupees, and the applicable rate of GST is 18%. The stock is dispatched to the distributors on a quarterly basis. Stock for a quarter being dispatched in the second week of the month preceding the relevant quarter. However, additional stock is dispatched at any point of the year if the company receives a requisition to that effect from any of the distributors. The company charges rupees 10,000 rupees per fan from the distributor towards packing expenses. So let's try to understand this particular paragraph. So what is happening is that, so with respect to any quarter, the stock is distributed to the distributors on a quarterly basis. So it is distributed in the second week of the month preceding the relevant quarter for any particular quarter. However, additional stock at any point of time they can make a request, and with respect to every fan they will be charging from the distributor 1,000 rupees per fan towards packing expenses. So 1,000 rupees to be included in the value, 1,000 rupees to be included in the value. Okay, and then the company has a policy to offer a discount of 10% per fan on the fan supplied to the distributor. So we don't know whether these distributors are agents or not, so we don't have the information. Then these distributors are treated like normal recipients. So in case when the distributors are treated like normal recipients, so the normal valuation will be applicable. So in case of the normal valuation, what is that we need to do is that, so first we will take the price. What is the price? 7,000 rupees plus discount plus packing charges 1,000 rupees. So the 1,000 rupees to be included in terms of section 15 subsection 2 clause C. So incidental expenses which is charged by the supplier to the recipient, so the 1,000 rupees will be added. So 7,000 rupees plus 1,000 rupees, 8,000 rupees. For that 8,000 rupees they are giving a discount. But see, for the discount only there is a special point. The company has a policy to offer a discount of 10% on fans supplied to the distributor for a quarter. If the distributor sells 500 fans in the preceding quarter, the discount is offered on the price at which fans are sold to the distributor, means excluding all charges. So the discount 10% is computed on 7,000 or 8,000. It is computed on 7,000, means 700 rupees is the discount. So not on 1,000. So the packing charges, there is no discount. Then the company appoints Prakash Sales as distributor on 1st April and dispatches 750 fans on 8th April as stock for the quarter April to June. Prakash Sales places a purchase order of rupees of 1,000 fans with the company for the quarter July to September. So for April to June, how many fans were dispatched? 750. For July to September quarter, 1,000 fans. The order is dispatched by the company on 10th June and the same is received by the distributor on 18th June. The distributor makes the payment for the fans on 26th June and avails the applicable input tax credit. The distributor reports a sales of 700 fans for the quarter April to June. So for the quarter April to June, 700 fans, which means, so for the second quarter they are sending 1,000 fans na. So that 1,000 fans is eligible for a discount. That 1,000 fans is eligible for a discount. Okay. So April to June, 700 fans for April to June and 850 fans for the July to September. Examine the scenario with reference to section 15 of CGST Act and compute the taxable value of fans supplied by Kaya Trade Links Private Limited to Prakash Sales during the quarter July to September. So for the quarter July to September, so first we will take value of each fan 7,000 rupees, add packing charges 1,000 rupees, less discount offered. So assuming that the information as to 700 fans are being sold for the quarter April to June is available before dispatch to the distributor. So when are they dispatching? On 10th June itself they are dispatching. Assuming that as on 10th June, if they know the information that for the quarter April to June more than 500 fans are sold, then the discount will be duly recorded in the invoice and it is allowed as a reduction. Then the invoice value will be 7,000 fans plus 1,000 fans minus 700 into 1,000, that is 73 lakhs will be taken as a value. Suppose if there is no information regarding the number of fans that is sold by the distributor, then in that case, at the time of dispatch on 10th June, the value of invoice will be 7,000 plus 1,000 into 1,000, that is 80 lakhs will be taken as a value. Thereafter, after that quarter, a credit note needs to be issued and that credit note will be issued at a later point of time. And for what amount the credit note will be issued? 80 lakhs into what is the discount that is being offered? So 70 lakhs into 10%, so 7 lakhs. So for 7 lakhs, a credit note will be issued along with the respective GST. Okay. So that's how you need to write the answer for this question. So this question is mostly like based on discount and lot of explanation part you need to write for this. Okay. Then, so this is about the question. These kind of questions you will be having. Then one more question, last question we will discuss. So see this question number 26. Question number 26. Rastogi and Company manufactures customized products at its unit situated in Madhya Pradesh. Cost of production for Rastogi and Company for 1,000 products is rupees 20 lakhs. These products require further processing before sale, and for this purpose products are transferred from its Madhya Pradesh unit to another unit in Himachal Pradesh. So Madhya Pradesh unit to Himachal Pradesh unit is a transaction between distinct persons. So in case of transaction between distinct persons, what will be taken as the rule? Rule 28. So transaction value applicable or not, all these things are irrelevant. So directly we go for rule 28. Value to be determined in terms of rule 28. The value declared on the invoice for such transfer is the cost of production of such goods. So in that case we will take open market value, like, kind and quality, cost plus 10%, and we have a proviso. If recipient is eligible for full ITC, then we will take open market value deemed as transaction value. So please see what is the situation. So that depends. We have to read in the third paragraph. Now the Himachal Pradesh unit, apart from processing its own products, engages in processing of similar products of other persons who supply the products of the same kind and quality. And thereafter the Himachal Pradesh unit sells these processed products to wholesalers. There are no other factories in the neighboring area which are engaged in the same business as that of the Himachal Pradesh unit. 1000 units of the product of the same kind and quality are supplied to Himachal Pradesh unit at the time when the goods are sent by Madhya Pradesh unit by another manufacturer located in Himachal Pradesh. So there is another manufacturer who is located in Himachal Pradesh who is sending the goods 1000 units, The ex-factory price of such goods is 19 lakhs. Okay. So now, first of all, it will not be taken as open market value, because open market value, this ex-factory price by another manufacturer, 1000 units of the products of same kind and quality, not the same goods, same kind and quality. So therefore it cannot be taken as the open market value. But we don't have to go for like kind and quality, because the first priority is what? Open market value. As recipient is eligible for full ITC, what will be taken as the open market value? The open market value will be transaction value, that is 20 lakhs. Even though the like kind and quality is less, but as the open market value is ascertainable, only the open market value needs to be applied. So therefore, as recipient eligible for full ITC, 20 lakhs into 20 lakhs is taken. So for the 1000 products, 20 lakhs will be taken as the value. Suppose, what if the recipient is not eligible for full ITC? If the recipient is not eligible for full ITC, then the open market value is not ascertainable, and this can be taken as like kind and quality. Even then it cannot be taken as like kind and quality, because for like kind and quality it should be under the similar circumstances. So how you can equate the goods which are sent from Madhya Pradesh? Yes, it is sent by Madhya Pradesh by another manufacturer. Whether another manufacturer will be taken as a like kind and quality or not. So generally like kind and quality similar. So which means, so same supplier should be taken. So that cannot be taken as like kind and quality. Then what should be taken as a value? Cost plus 10%. So cost plus 10%, cost of production is 20,000 plus 10%, 22 lakhs will be taken as a value. So this is a question related to valuation rules that can be asked, tested in exam. Okay.